Well, we've heard a lot lately about inflation and the ways that the federal government is hoping to combat rising inflation in the US and hopefully even around the world in other markets as well. And we also spoke recently about the Federal Reserve raising the interest rate 0.75% once again for the third consecutive month, quite unprecedented, and the impact that that may have on the housing market. But what impact will that have across markets, including the stock market and for traders? Joining us now to discuss is Jason Brown, options trader and stock market coach from the Brown Report. Jason, thanks for joining us again.
Tyler, thanks for having me.
Glad to have you on. So this is an interesting take because so often what happens in other markets does affect the stock market and vice versa. In this case, with again the Federal Reserve looking to combat inflation by raising the interest rate ever so slightly, but in a way that is quite unprecedented in terms of consecutive months of making this move, how may that affect people that are trading stocks and those that are investing in the stock market alike?
Yeah, well, first, I think we got to really peel back the layer and ask why and how does interest rates being raised affect the economy in the first place? And once you peel that back, you can start to see the ripple effect that it'll have. So a couple of things happen when they raise interest rates and demand goes down. But if we really think about why does demand go down, most people make their biggest purchases by financing it, which means they either use a credit card. The average American doesn't just walk into a car dealership and says, I'm going to drop $100,000 on a Cadillac Escalade. Most people don't just drop $200,000-$300,000 on a house. They drop 3% down payment, maybe 10% of it's conventional, and they finance the rest. And so that finance portion now says maybe something that was going to cost you $300 for a car note is now going to cost you $500 to $600. So mathematically, that's taking 200 to 300 out of your budget from somewhere else, right? You still have to have a car, especially here in Michigan. It gets cold, so you're like, I have to make this purchase, but where else am I going to cut? So number one, it causes you to cut in other places. Maybe you won't take that vacation. Maybe you won't buy that new iPhone. Different things like that. Maybe you won't get the car that you actually want. You'll buy a lower model car. And so that has a rippling effect. So if Apple is now going to sell less iPhones because you don't have an extra $300, you're not going to take that vacation because you don't have that extra $300 per month, that you would have normally had extra $3,600 to spend on a plane ticket or a hotel. Now that also slows traveling, that slows consumer spending on goods like, tech items. And so you're like, okay, so what's the big deal? Well, the companies don't just sit there and take it, right? If you're buying less stuff, that means they're selling less stuff, which means they're making less profit. If they're making less profit and selling less stuff, they don't need as many workers. So now we start to move over into laying people off, and companies may not be able to make their earnings. So all that now translates into fear on Wall Street, which means if they can't make their earnings because people aren't buying enough stuff, at this moment in time, the company isn't worth the current price we're willing to pay for the stock. Therefore, look out below. We start to see stocks tank. So that's really that rippling effect of how it affects the consumer and how it bleeds over into affecting the company, which in turn affects the stock price.
And that's not necessarily this concentric circle of impact. There are crossovers across that circle too that continue to spin around also, because you think about people being laid off from work. Now they have more, now their expenses are even more of an impact on their home. And they're not able to maybe put so much of their paycheck or whatever income they have into the market and invest. And their investments too, with the adjustments these companies are making, are also going to impact their retirement down the line, all of which makes life that much more expensive and that much more of a financial kind of hoop to jump through all along the way. So for those that are in the market, that are trading, that are investing, and there is a difference, we've discussed that ad nauseum in our previous segments, what should they be doing to try to weather this storm or shoulder whatever changes may come forward as a result of these interest rate hikes, whether they're positive or negative?
So one of my favorite things to tell people to learn, and that's the key word, learn how to do, is use options. Most people just buy stocks or they buy index funds. And really, when you just buy and hold, you have only one way to make money. That's if and when it goes higher. Now, that is a strategy. So for anybody that's listening, that's a buy and hold that doesn't like actively being involved in the market and don't understand what options are, your best friend is time and realizing over time we will come out of this. And there's never been an interest rate, recession, pandemic that the US economy hasn't come back stronger for. So for the person who has time is your friend. Just be patient, stay the course, just keep dollar cost averaging down. You'll be okay. Then there's the person who doesn't have time. And then we'll talk about the person in the middle. The person who technically doesn't have time, you want to make sure that you're looking at good companies that can weather the storm. And when I say good companies, if you think about a company like Amazon, they've already started making the switch to electric vehicles. So when gas prices are high, they're not as affected as much. They have a huge e-commerce where people can just shop from home. So they're not as affected by can someone in this specific local area go to the grocery store and afford it or not. The whole world is their customer. By the way, they're even venturing into things like groceries so that they are also able to profit off something that everyone has to have to live anyway. So you want to look at companies like that. You look at companies like Target. I don't care how bad it gets, you're probably going to buy some toothpaste, deodorant, go get some of your consumer staples that you have to have no matter what, the Targets and the Walmarts of the world. So you want to look at companies like that. You want to look at companies like Microsoft, who not only do they sell computers, but that may slow down, but they have the Azure cloud, which is where companies migrate. We're in this digital economy, but companies need a place to store all this information. Well, it doesn't necessarily get more expensive for them to store your data. So they're kind of insulated from gas prices. They're not bringing trucks loads of data, they're bringing computer loads of data. So you want to look at companies like that. Now, the person in the middle says, I know I have time, but I also don't want to wait. How do I profit off this right now? And so, what you can do is use what are called put options. And put options are basically like buying an insurance on your car. It's basically saying, lock my portfolio in at this price. So, if it falls any further, I will be locked in at this price and I can't lose any more money. In fact, as it falls, you may also start to make money, but that is a skill that people have to learn. And I only could touch on it a little bit here, but a put option basically saying if the market crashes, kind of like your car crashes, put me back whole. Meaning if I have $100,000 car, I crash it, they will make you whole and give you $100,000 check. Or if the car's worth 50,000 after that, they'll cut you a check for the other 50,000 and you'll be back at $100,000 car roughly. That's the same thing we can do with the stock market.
More information and helpful tips can be found at thebrownreport.com. Thebrownreport.com for all of that information. We are joined on the program by Jason Brown, stock market coach and options trader from the Brown Report on today's edition of the Megacast. If you want to learn more about put options, that's the place to go. Go to his website and you can learn about that whole process from Jason himself and ask him questions. Thebrownreport.com. And you touched on this a little bit, Jason, as these companies are adjusting to these rate hikes and the way that they're going to affect their companies. For some, that can also be an opportunity, in particularly in their investments, to take a look at what some of these companies may be doing as a result, and which companies may actually benefit from this sort of a situation. So when somebody is entering the market or looking to make those investments to try to shift their money around and weather this storm, what should they be looking for in companies to determine, is this company potentially going to benefit in the short term and or in the long term from this situation, and I should put my money into that company?
Yeah, so similar to what I said earlier, you want to look at companies that are going to thrive no matter what, but then there are companies that actually benefit from interest rate hikes. So, for example, and maybe not only just interest rate, you look at a company like Tesla. People, after the gas kind of mini crisis that we had, people are seriously considering electric vehicles. So, you'll start to see companies like Tesla that, even though financing may be a little bit higher, they don't want to be in a situation where they are uh, a slave to gas prices, if you will. I can't think of a better word, but they don't want to be so tied up with gas prices. You think about truck drivers who have to deliver goods across the coast. You have Tesla coming out with an electric a 18-wheeler type style truck. Those are people who are going to benefit, like Tesla, from a migration away from the norm so that they can be protected from those type of storms, not just the financial interest rates. And the money that they'll save from things like that will outpace the short-term inflation. You also got to look at companies that do credit card. You look at Visa, you look at MasterCard. You got to think they make their money by loaning you money and by you paying interest. So if people are potentially going to lose their job, I hate to say it, most times they're going to go to a credit card to bridge that gap, which means they're going to be paying small monthly payments, which means they're going to be paying interest rates for a longer period of time, which is in turn going to turn into profit for those companies. That doesn't make Visa a bad company. They provide an opportunity for you to bridge the gap, not get your lights cut off, still pay different things, and float the money on credit till you get back on your feet. So they're providing a service, but it's also a service that they're able to profit for because now your interest rate usually is based on a base rate plus prime. And once that prime rate goes a little bit higher, you're paying a little bit more interest. So those are just some things to consider. Companies like that that'll benefit from higher interest rates.
TheBrownReport.com is his website for more helpful information and to learn more about stock market trading as well as investing from Jason and the crew at the Brown Report. TheBrownReport.com. As we're joined by Jason Brown, stock market coach and options trader on today's edition of the Megacast. A few more minutes with you, Jason, before we'll say goodbye today. I want to give you another opportunity for those that would like to learn more from your website about some of those learning opportunities that are available through the Brown Report.
Yeah, so right on our website, if you're not familiar with options, we have a free option starter pack. So you can download it. It's a free PDF. It'll walk you through what's a call and what is a put option because most of these terms are foreign to people. But I guarantee you, if you've ever bought a house, you've participated in a call option. If you've ever bought insurance on your house or insurance on your car, you've participated in a put option. They just didn't call it that when you sat down at the desk. Every month when you pay insurance for your house, you're paying for fire in case it burns down. You're buying a put option. You're saying if this thing crashes, burns, they will make me whole. And that's what we teach people. We teach people things that they already know how to do, but they didn't know that they could do it in the stock market. And so check out the free PDF download.
You can also find his Money, Markets, and Mindset podcast on his website as well. All that information and all those resources are at thebrownreport.com. Jason, thanks for joining us today.
Tyler, thanks for having me.